Here we have three basic things to understand before investing in crypto. What we are trying to do here is to develop what is called the investor mindset instead of following the high. Something that might not be new to you, but is very important. First of all, investing is not speculating. We are looking for something in the long run, so not the hype of the moment, because price is not immediately equal to the value of what we are looking for. And therefore, the fundamentals behind what is the asset we are analyzing are not minor details. This is valuable for whatever financial asset you are analyzing. This is way more important also for crypto world, that what we are talking about here. So why are you interested in crypto? That's the first point. That's the first question you should ask yourself. And that's exactly what I did to myself, for example. Be honest. The answer is very important, because most of the time, the reason why you started being interested in crypto is to seek an opportunity, to seek the moment of something that suddenly appears in the news, something that could be the next Bitcoin, for example, if you lost the first opportunity of Bitcoin. You're looking for an opportunity. And that's exactly what happened to most of the people that are entering the crypto world, let's say, probably for the wrong reason. What are we talking about? The expectation is easy money. It's not something new. It's not something that we need to hide. We all know that. That's the reason why we enter into this market. Probably, let's see if I'm able to get this money out of it. The reality is a high risk of an innovation, something that is innovative, probably because of innovation. I don't really understand. I don't really know what's behind. So what am I facing in reality? The story we hear is not probably the story we're going to face. The biggest mistake for investors is having a look at the price. Oh, look at this, it's skyrocketing. This is going to be massive. Look at the adoption. Look at how many people are following it. The price is going up. Probably there's a lot of people in the market that are interested in this asset. Yes, it might be true. It might be real in the short run. But in reality, we all know that the price doesn't reflect immediately the value of what we are looking at. Price shows the movement of the moment, maybe the momentum itself, but it doesn't give us information regarding the creation of value behind. That's an important thing we need to consider. Speculator has a completely different mindset than an investor. A speculator normally we can imagine that is moved by emotions, is looking to trends, is chasing trends, is looking for the hype of the moment, and is probably interested in only short term. Has a completely different mindset. That's exactly what we are trying to explain here. An investor have a framework, an approach, a way of analyzing things, and a procedure to act. They are more interested in analysis. They are looking, therefore, for the value. What's the real value of what they are what they are analyzing at the moment? Therefore, they have a long-term mindset. Same market, completely different behavior. That's what is important to understand. And therefore, we can start considering every crypto project through three lenses that are very important to us. Technology. What's the technology behind? Is it something new? What's the innovation? What's the impact on the market? The governance. Who is really managing that cryptocurrency, that token? Who is getting the benefit out of it? And the economics. Does it work? Does it have a real value in the market? What's the economic result of using or not using it? If one lens is missing, probably the thesis is incomplete. What does it mean to us? If one of those elements is missing, probably that crypto asset is not really valuable. It might be only the hype of the moment. What's the first pillar? Technology, we said. Technology, what does it mean? What's the problem that this asset is trying to solve? And you might have heard for sure three names like Bitcoin, Ethereum, Solana. three cryptocurrencies, the three crypto assets that are out there that you can easily purchase through a lot of different platforms. But what's the reality behind those three elements? If we go into details, we clearly see that Bitcoin is solving a specific problem that is, for example, the need of a decentralized finance, something that is not managed by one specific, for example, central bank. Ethereum, on the contrary, is trying to solve a completely different problem, that is the infrastructure. That's how the money is circulating, for example. And Solana is a completely different thing. Three elements, three different problems, apparently just one element in common, crypto. The second pillar that you might be interested to understand better is the economics, the token economic. Tokenomics are the rules, the incentives, and the structure that make a token valuable and useful and sustainable. For who? For the users, basically, for who decides to hold this token. While a crypto token works within a blockchain-based project or an ecosystem. That's why we need to understand better the economics behind. What are we talking about? We're talking about supply. Is there an infinite supply? Is there a maximum supply that could put a limit on the number of tokens that are going to be issued in the market? Is there a demand? Is the demand linked to something specific, like a real-world need? That could be, I need to move my money in a different way, in a faster way, in an easier way. I need to be more secure, for example, using the contract that are, for example, the smart contract that are signed into the blockchain. Do I need to reduce the paperwork, for example? Then another important thing is the idea of scarcity that is directly linked to the supply. How, for example, many tokens are in the market, how many tokens are moved, are those tokens going to be diluted in the future or not, which is the fourth element we need to consider. So the number of tokens matters, yes, of course. That's the reason anyone needs those tokens. The third pillar is governance. That in one simple sentence could be trust is not a feeling in this case, is a structure. Who is behind this token? Who controls the project? Is it a company? Is it a completely open project? Who benefits from using or not using the token, for example? Who make the decision? Visibility, rules, incentives, transparencies. Those are all elements of governance that we need to consider. And as you can see, we are not talking about prices. We are not going to do a mathematical analysis of the price of that specific element. We are trying to understand if those crypto assets you are analyzing have at least the bare minimum to stand and survive, for example, the market. Why most crypto investors are losing their money? Why you might be losing your money in this moment? Probably because you don't have a proper framework. Probably because we are looking to gather information from different influencers that are helping creating the hype of the moment. Probably because there is a very human emotion in between, that is greed. Which means that we are not considering a proper risk management approach that is making our decision process lacking something, for example, or simple fear of being missed out. The market punishes emotions. If you have been active in the financial market without a proper framework, with some of those elements, you might have faced this directly on your own. Therefore, we need to understand what are the questions that a professional investor in the crypto market is interested to ask himself. We are going to move from which coin should I buy to how do I evaluate opportunities? What is the framework I should develop and therefore apply to understand what has the real value out there? At the end of this first module, what are the key takeaways? We discussed that price is not a value, is not a direct reflection of value. We realized and we already knew that speculation is not investing. But it's difficult moving from speculation to an investor mindset without understanding the fundamentals. What are the fundamentals of the crypto projects I'm analyzing? And therefore, having a better analysis approach help us to have better decisions later on. The next module is related to how money is circulating, how we can get our own money in the cryptocurrency, in the crypto market. Let's have a look later. Thank you.